Hello traders and welcome to another video review. Today is Friday, July 1st, 2022. Let's start new month. Let's take a look what is going on today on the Forex calendar. Important events were reported overnight, mostly from Japan and China. From Japan, Tankan large manufacturing and non-manufacturers index had been published. Data are for the second quarter, and as you can see, both of them misses the expectations, and it looks like only the non-manufacturers index is better than last reading of 9 points, and the actual reading is 9 points of 14 of the large manufacturers index. So mixed bag of data from Japan. We'll see how the Japanese yen will react. Chinese data, Caixin manufacturing PMI beats the expectations. 51.7 is the actual reading. Forecast was 50.1 and the previous reading was 48.1. So pretty good data from China. German manufacturing PMI is scheduled for release 5 to 10. Manufacturing PMI from the UK scheduled for release 10:30, and then CPI scheduled for release at 11 o'clock. All of this important data, most important data, will be published during the London session, and the ISM manufacturing PMI from the US is scheduled for release at 4 p.m. Here we forecast, the market participants forecast a decline from 56.1 points to 54.9 points. So pretty much interesting beginning of the new month, and actually the end of the week. Today is Friday, of course. So let's see what is going on the Japanese yen, and then we are going to jump to British pound. Daily time frame chart of the Japanese yen, US dollar to Japanese yen, USD JPY is looking heavy. We got something that might be considered as a double top-ish pattern, and then we got this bearish engulfing pattern where the up candle has a kind of a significantly larger upper wick. So bearish confirmation, yes, present. We got the down move here, we got the down candle here. Where are we going with this? We are going towards the area of 134.30, 134.50. so that's the intraday support. However, if it's violated, if it's broken, we might even go lower next week towards 132. This is the low of the this candle from the middle of the June. So of course, what do we have here? Technical support 131.38. so that's not a problem here for the bulls to bounce higher. However, please notice the fact we got multi-divergence. This divergence, of course, can be played out by a larger amount of market participants, long-term traders, short-term traders. However, this market, I'm trying to zoom out to show you that this market is rallying heavily. This is a nice uptrend. So during the uptrends, this kind of a bearish divergence might happen. The market might hit the extremely overbought conditions and then might cool off, might come down from these levels. However, after the period of the consolidation or kind of a pullback or correction, we will likely continue the uptrend. So we will likely do another swing high. Of course, the last swing high was made at 136.75, and it looks like we are going higher soon. What is going on the British pound to American dollar daily time frame chart ahead of the data? CPI data, ISM manufacturing PMI is going to be released from the UK, so it might affect the British pound data. As you can see here, we tested the technical support 1.2082. This is the perfect bottom for the wave B, and maybe the data released today will trigger higher move in wave C. Otherwise, well, if there is no rally, we would likely go lower. The low is the last month low as well, located at 1.1933, the beginning of the wave A. So if the data will disappoint market participants, most likely we're gonna take this level out and the market will break it lower, making new swing low, because this is the monthly low. But as you can see here, this is the low for the very long period. The top is from the 2021 28th of the May, so it's already more than 1 year of the down move. So please keep an eye on the British pound, keep an eye on the data release. We might learn something here. Euro dollar to the Japanese yen is kind of an interesting pair because of the ECB data today, manufacturing data of course. And what do we see here? Perfect count for the 5-wave impulsive structure, with the wave 5 terminating around the highs of the wave 3, then A, B, and now the wave C to the downside is being made. We are back inside the channel. Let me just adjust this channel to the newest data available. So this is the low for the wave 4. So well, it doesn't matter, we are still inside of the channel. However, that makes a little bit more sense right now. If we extend this channel, for example, to this wave 3, now we have a technical channel. This is not the Fibonacci or Elliott wave channel. That means we are heading towards 139.99, and if this level is violated, 50% of the Fibonacci retracement of the whole wave up is the next target, 138.48. In case of the extension to the downside, we still have 61% of the Fibonacci retracement. 137.11 might be the next target. And please take a look at the momentum. That's the clear bearish divergence. This is in line here. Wave 3, wave 5 top. This is the top for the wave 3, top for the wave 5. Bearish divergence, we going lower. Right now, we are on the level of 50, so neutral level, and it looks like we want to break into the negative sentiment territory. That means we will definitely hit the level of 140, and then even we might hit 158, 48, 50% of the Fibonacci retracement of the last wave up. Pretty intense setup on the euro to the Japanese yen. Let's take a look at the S&P 500. So this is the SPX ticker. What do we have here? Well, we are doing good. We are doing good because our scenario is being played out. Top for the wave A, decline in the wave B. We need to take out the lows of this candle, and let me say this is okay. This is another one, so we can move it here, and the lows of this candle might be the bottom for the wave B. Otherwise, of course, we should be prepared for the bottom of the wave C at the level of 3,635. So we wait for the wave B to bottom, right? We wait for the wave B to be terminated, then bounce above 61%, above 3,971 towards 4,109. So this scenario is still being played out. Only a new low below the wave C low at 3,635 invalidates this scenario. So far, so good. Bitcoin last but not least. The situation on the Bitcoin is kind of the same as we have on the S&P 500. We got the bottom for the wave, potential bottom for the wave C and the wave 5. Wave A to the upside, wave B to the downside, possibly completed. This candle here, daily candle, doesn't look good, but the daily candle has not been closed yet. So we can still rally. We can rally towards the level of 25,266, 25,432. Somewhere there, wave C might be completed. However, if we break below the yesterday's low, 18,630, and close below this low, the chances for a rally are very, very low. We would likely take out this low here, low of the wave 5 and the wave C, before any substantial rally to the upside will be performed. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next week. So take care and bye bye.